Knuckman of Bullseye Options joins us on the show now. Alan, considering how this stock market has ramped up, are there any stocks out there that you would buy as individual plays?
Well, I'm still bullish, but the problem is we've had a 10% straight up move without any pullbacks or any corrections. From a risk reward standpoint, buying in here, even though I think we're going to go higher, the question is, how do we do that? Is there a pullback first? You could have a 5% pullback to give up some of these gains and then continue to march higher. So you have to be very, very selective. And as far as individual stocks at these levels, unless you're looking more than 6 months out, it's very hard to be a buyer here.
What about the dollar? The dollar has been strong, as you know, in the past couple of months here. So what would be your play on the dollar?
Well, that's really the story. That's what's pinned the other assets markets down. So really, it's only been the stock market that's rebounded. If you look at the dollar, you look at gold, you look at oil, foreign currencies, they're all down near their lows and actually multi-year lows. But we saw some interesting action last week that typically means that some of the worst may be over and the sellers may be getting exhausted. We saw a key reversal in the euro currency, meaning we made new lows and closed higher on Friday. The same happened for gold. And we saw that the crude oil market has somewhat stabilized. We got near 80. And last week, even though it felt a lot worse, crude oil was only down $1.80 on a weekly basis. So I think there's more upside potential than downside for a lot of these assets that have been beaten down. I'm looking specifically at the Canadian dollar currency, the FXC ETF, as a way to participate because you benefit if the dollar stops going up, and if crude oil does stabilize, move higher, the Canadian currency could very easily get to 90 and then 94 once again.
Thank you, Alan.
Thank you.